Every assignment or test you're going to see this semester is going to ask you to prepare your statement of cash flows using the indirect method. I did, however, want to expose you guys to how the direct method works for preparing the statement of cash flows. So in the direct method, the operating section, the financing section, and this one doesn't have any, but if there were, the non-cash section would all be exactly the same. If you are paying the cash for something, your cash flow is going to be going down. If you're selling something and taking in cash, well, then your cash flow is going to be going up. Where this method differentiates from the other method, from the indirect method, is the operating section. Instead of adjusting our net income to our net change in cash using all of those concepts we saw earlier, adding back in our non-cash depreciations, adjusting for any gains or losses, and accounting for the changes that we reported in our current assets and current liabilities over our last two balance sheets, we're going to actually physically report who we're paying cash to and who we are collecting cash from. So you're going to have your receipt section, which is could be like collections from your customers, any revenue that you've made off of investments that you had during the period, and your payments for your bills to your suppliers, to your employees, to the tax man. You're going to state what your source is that you're taking cash in from or paying cash out to. And while in concept, this sounds like a much, lot more logical way to prepare this. This is, statement of cash flows. You guys want to know where our cash is going. This is who it's going to. This is who it's coming from. It's much, much more effort to prepare in the long run. So much so that the Federal Accounting Standards Board, FASB, which creates GAAP, has told U.S. companies that they would prefer if they prepare their statement of cash flows using this direct method. But they didn't say you have to. They said we would prefer if you did, but you still have the option. And 95% of companies still use the indirect method of preparing a statement of cash flows as opposed to this one. And the reason being is the preparation of the operating section is just so much more work than it really needs to be for the information benefits that your users of your information are going to receive. Let's take, for example, here, how we would have to compute our cash receipts from customers. Well, what would go into that? I mean, what accounts would be affected by selling something on account? Well, you would have your sales revenue, you would have your accounts receivable at the beginning of the last period and the end of this current period. So what you could do here to figure out your cash receipts is take your net sales revenue of $286,000. We're going to assume that's what ShopMart had. Add to it your beginning AR of $73,000 and take your ending AR of $90,000. And that would give you cash receipts from customers in total during the period of $269,000. The issue with this is you need a separate formula for every single item that you would have on the operating section of your statement of cash flows. And even farther, there's some things that just won't show up with formulas. You have to physically go back into your T accounts and look back and see who you paid to and who it came from. So taking these numbers from the computations you get in your formulas is just a lot more trying experience than the indirect method, where all you need are a few financials. So yes, the indirect method is a little awkward, for lack of a better term. It's strange the way that you need to adjust your net income. But in the long run, you will be able to compute your statement of cash flows in probably less than half the time as it would be for the direct method. The real reason I wanted to show this to you students is that for now, FASB has said in GAAP that we would prefer that you use the direct method, but you don't have to. And if that changes in the future and they say you have to, well, then all of the stuff that I just showed you for the indirect method becomes obsolete. And this is the nature of accounting. Things change all the time based upon government guidance. I just want you guys to know that the method that you are going to be using for your statement of cash flows isn't the only method. And there may come a point in your future, if you're working in a business where you're managing, the statement of cash flows comes to you, it looks entirely different. Or if you're an accountant and you're preparing it, you have to do it in an entirely different manner. Or if life takes you in another direction, you're just a private investor looking to see what company you should invest in and you want to go check their statement of cash flows, well, that could look very different too. So, as with all things in accounting, it's subject to change. This is entirely subject to change. I don't foresee it happening anytime in the near future, but I've been wrong in the past.